Hello traders, welcome to the Goldmine Zone, the place where institutional moves become your profit opportunities. Today I am going to show you a step-by-step three-dimensional strategy that combines timing, structure and volume to catch explosive option trades. Whether you are trading in Nifty, Bank Nifty or individual stocks, whether you are in a Indian market or in the US market, you can adopt this. This is an universal system. You can adopt it, and this method will give you the edge that most retail traders miss. Let us dive in and find your gold mine zone. Yesterday, I have introduced to you to the episodic event concept. Episodic event concept you have gone through. You need to go through my video, that video, and I have coded for episodic event to identify the stocks and options for this event. When you identify this event, when you code for this, that is not suffice. So you need a three-dimensional filtering system for high probability option entries. Why? Because in the this gives you institutional edge, pinpointing options explosions with the gold mine zone, a three-dimensional filtering system for high probability option entries. Disclaimer: this content and this indicator, what I'm going to release now, this indicator, episodic pivot, is paid indicator. You need to call me on this number 9845209600. The core problem in option trading is option thrive on fast, strong, directional moves. They need volatility. Most traders fail because timing is wrong. Theta kills the contract. Goal is hunt for the exact moment institutional money enters to generate speed. That is the thing. Options don't need price, they need timing and speed. You should need timing and speed. So we need to capture this gold mine zone, a three-part filter. Three powerful confirmations must align: right time, cycle trigger, right structure, structural bias, right ignition, volume entry. So this is the graphical representation of the three-dimensional trading filter. Right time, that is the cycle trigger, right structure, structural bias, right ignition, that is the episodic pivot. So then that is the gold mine zone. When you enter into the gold mine zone, definitely you are going to capture the gold. The time trigger here is by constant observation on the market. I have found out that mid-week bar mid-month of the identifier. There we can identify the proper trigger, and even the option premium also become little bit cheaper. So we are going to identify the time-based step zone when institutional cycles reverse or accelerate. That is the time zone. They will try to reverse or accelerate. So you need to identify that zone. So we are going to mark setups near midweek, Tuesday or Wednesday, or mid-month, 10th and 15th. It is made easy by coding. I have coded for that indicator. Midweek of the month indicator, identifier indicator, that becomes very easy. If you purchase my this episodic pivot indicator, which is you can access this indicator with nominal price of 1,000 rupees. I'll give it to you for people who access this with 1,000 rupees. Actually, it will be more than 2,500 rupees for the access, but I am giving it as a promotional offer so that you can access to it and you can trade with that. The filter one is the time trigger. That is very, very important. Timing is most important for an option buyer. So we are going to select with the help of the indicator mid-week or mid-month. We are identifying the tracking the price actually. Here with the indicator, this is the indicator which highlights on its own your midweek of the month highlighter. So what it does, it starts coding for that. Automatically it starts coding for that. I've taken the example of Asian Paints to show you because episodic event will not be seen on the stocks because the stocks will move slower. But we are capturing with this idea because since the contracts expire every month on the midweek of the month, actually institutional traders they will accelerate or they will try to they will try to come out of the position. That period only we will come to know what the institution is doing. Here in this Asian Paints, with the indicator midweek of the month automatically highlights. I need not see, it is not possible to remember midweek of the month or anything. Day to day, you cannot pause automatically when it starts coding. You will come to know the cycle has started. During that cycle, I noticed this Asian paint coming down 2 days, and the third day it started showing reversal. When it started showing third day reversal, for that my filter is rolling pivot and Gan Hilo Cambo. All of you, most of the people who are observing my video, not most, and nearly 100 people have accessed this indicator and they are reaping the benefits of this indicator. They are trading with the structure. They are not getting the exact time to enter into discounted price. Combined with that, this is very, very useful in the stock option. So the structural bias, the rolling pivot, defines the directional structure before the move. When the price is above the pivot, bullish. Below pivot, it is bearish. Look for price hugging or crossing the pivot to confirm strength, bar, weakness. So again, I'm showing you the Asian Paint stock, how it aligned with a time cycle midweek of the month, and I was able to pinpoint this with my rolling pivot. When it is getting aligned with the rolling pivot, immediately I'll shift my thing to an option related to this time and I will track that. The filter is ignition point, the episodic pivot. Because we cannot see the episodic pivot on the stocks, immediately we can see on the related option premium. This episodic pivot will pinpoint actual eruption where institutional volume enters. Sharp price move plus massive surge in volume, that is the entry signal. Confirm strong participation, not a fake out. It will not be a fake out. With this episodic pivot coded indicator, you are getting a strong participation of the institutions. So, I showed you the example of the Asian Paints. I am coming to you to the call option. And this light purple color is the episodic pivot has been coded. It identifies. With that, the structure is aligning. Price is above the pivot, rolling pivot. Price is above the GAN hilo. This is the perfect time. I got all the three. Episodic pivot, volume, institutional presence, and the structure and the time. Everything aligned. This call option around 40, you are entering it. You, without anything, you can ride the trend for 1 or 2, 3 days. This call option started from 40 rupees, rallied up to 167 rupees. You can capture this movement, or you can capture little movements also. If you are very nervous to hold the position, you can capture this. This is like an short-term swing on the options without the fear of theta decay. You can enter into the stock options. Trading the alignment is the gold mine zone. Enter only when all the three conditions are satisfied. That is the requirement. And time is midweek or mid-month, midweek of the month. Structure is rolling pivot. Ignition is episodic pivot. All the three should be there. Result will be, it will be a very short and strong, fast moving breakouts. So you will be into the trade in a strong momentum trade, and you will be out of the trade with the profit. You are entering into the gold mine zone, and you are entering into the momentum. You might have seen how many times within 20 minutes, even in the Nifty option, it rallies like that. Even you can capture this episodic pivot point, and you can enter with the institutional money. You can hold the either call option or the put option at a very discounted price without any fear of theta decay. So the conditions is enter when there is episodic pivot on the option chart I'm showing. Price above the rolling pivot, price above the GAN hilo, and the pivot is above the GAN hilo. Pivot should also be above the GAN hilo. So it is a systematic trading checklist. One is timing the market, you mark with the watch list. Structure, confirm directional bias with the rolling pivot. You need to confirm it. Entry is episodic pivot, triggers entry with volume plus price exposure. Options, you take a short term directional trade. That is what needed. You need to have a very short term, 3 to 4 days. That's it. You are entering there and you are finishing it off the trade. That's it. Okay? That's how it is. So stop guessing, start waiting for alignment. Goldmine zone aligns cycles. Yes, it aligns cycle, structure, and volume for institutional edge. That is what is needed for a retailer trader to be profitable. You can make money. Trust me, you can make money. Follow these 3 steps with rules, discipline, patience. All the three should be there. You should have, like these 3 steps, you should have discipline, patience. If you do not have that, you are going to lose money. So, next, apply midweek, mid-month cycles and apply 3 filter logic. So, you will be with the smart index edge pinpointing options explosions. Okay, friends, this is the end of my presentation. I'm going to release my indicator, Goldmine. Goldmine indicator for you all people on this Diwali day. That is episodic pivot indicator. With the episodic pivot indicator, I am going to offer with a nominal price for the midweek of the month indicator highlighter with only 1,000 rupees. Okay, friends, thank you very much. Nanakshi Swami signing off.